Good morning. Welcome to this special webinar. This is called Elliott wave counting or trading or something like that, because Elliott wave is in a subjectivity. It's in a very high subjective methods, but with a clear understanding, you can make yourself accessible to a good intuitive knowledge. When I say intuitive, that means this knowledge can be obtained from an apply default. Yes, I applied default and I'm going for it. Sorry for that. Yeah, I'll just take down this canvas, go for solid, none. Okay, fine. I had changed it, so I just went for the default. One of the most important concept in the Elliott wave is that people do not understand or do not follow. Is that when Iron Elliott explained the system, it was too subjective, and the prices they were used in early 1930 were closing prices. They were not used as in a high low, because at that time the anchor symbol was used early 1910, 1911. So in that there was only high and open and close. There was HLC. There was no open, high, low and close. So now that subjectivity has turned into an chaos because people don't understand it correctly. But anyway, I'm going to make it simple for you to understand this and let you know what you think of it. Okay. So it's a 3-3-5 basically. The how I look it into is not important. Whether does that mean 3-3-5 is an you can say WXY. It's a W, X and Y, what we are looking right now. Okay. So in this 3-3-5, ideally the 3-3-5 patterns are built in this way in the horizontal axis. Now this video will clear your lot of ambiguity and lot of your inexperienced this thing. From the peak of this, the market will drop in a three-wave pattern. Then from the bottom phase, the market will rise in a three-wave pattern. And from the upside, it will be in a symbolically five-wave pattern. It is an ideal understanding of 3-3-5. So this is a three-wave down, three-wave up, and then five-wave down, which is called as in the Elliott wave is in a flat pattern. 3-3-5 is always a flat pattern. 5-3-5 is called as a zigzag pattern. That is known for what? Again, I'm going to tell you. If you are inexperienced Elliott waver and other things, this is 5-3-5. Now, why I say this is 5-3-5? Because it consumes a larger portion of this entire area with the sharpest decline. That means the decline is so sharp, within 3 strokes, stroke 1, stroke 2, stroke 3, it consumes this much biggest area. Do we need the same 5-3-5 to go up? And ideally the answer is yes. If it has to go within 3 strokes, it has to be 5, 3 and 5. And when the last leg is being made, it is ideally subdivided into 1, 2, 3, 4, 5, indicating that this division is already a response, already an exhausted market. See why this subdivides into 5. 1, 2, 3, 4, 5. Why it divides? Because these two sharp markets have already made the people exhausted. So people are in a bit of confusion. Some people will sell, some people will keep holding. When first drop comes, people will buy. Then again, when the failure to make a new high, the people will start selling. So this area becomes very sharp. That is what this area becomes very sharp. That is what I am trying to show you in this chart, so that you can understand that why this is so sharp in the nature. When it failed to make a new high from this below, the market becomes extremely sharp. There is a great disappointment takes place exactly at this below, and that the reason this becomes the most sharpest wave in the 5 waves. Then the market kind of consolidate and try to explain themselves. Market try to explain themselves in the sense that people will, okay, now we have seen so much of this thing. Now are we going up? Are we still going to accumulate, or are we going up? We are exhausted. So this basically this phase, then this phase what we are going to see now, this phase the discussion in the market will come that are we really going up, or we are going to consolidate furthermore. Once the low of this is broken, this is already broken the low now. Maybe some after consolidation another low will be broken here. After that, people think, yeah, it is too much now. Let's build up the market. This is how the psychology works. This is how you have to understand. This is how you need to follow the subjectivity on a unrealistic basis. That means a light wave is a subjective matter, but on following it on realistic basis will give you the edge before the market responds. You have an edge that is telling you that this is going to give you a very decisive entries and decisive trend to pick in the direction you want to trade. Okay, now let's clean up everything. So let me go back and make this symbol as a little dark black. Let's make it a black. Okay, now tell me, after this peak, is there any close above this? There is no close above in the Sensex, my friends. No close above the Sensex. So that is peak. Western hemisphere have always believed the price should close above it. It should not be a distraction. Okay. And is there any price closed below this? The answer is, you probably see, yeah, it has closed below that. Are we reversing? We will see that. First, we'll try to understand this. If you see, I'll just draw something. Very, very similar patterns. Okay, let me make this little different for you. Okay, let me make this, yeah, different for you because to understand that is a pattern. And what do you see here? Oh, you wish you had seen that earlier, right? भाई साहब ये पैटर्न यहाँ पे रिपीट कर दिया. Let me change the color, right? Let me change the color. Okay. Let me take pinky or red. This pattern has repeated here. What the heck? Tell me, if you had known that this pattern will repeat here in this, would you trade selling the options, or would you trade selling the futures? Quite a puzzling, right? You should be puzzled. You should be puzzled. You should be puzzled. No questions in that. Now what happened? Now what happened is this is 5 wave, this is 3 wave, and this is 5 wave. But all these have their own unique way of structures in their own way. and we know they behave in the same way. Okay, so now, so this is 535. So let me put this as a ABC so that you understand A B C. So this becomes a primary W. So now we know that we have a three wave. When you have a three wave, is correction over? The answer is no. Then you have 535. Again, you have, let me count in front of you so that you get the idea. So that, let's say this is 1, this is 2, this is 3, this is 4, this is 5. Wow, congratulations, you have 5 waves. You have 5 waves. Now we have ABC. 1 second, let me take it. We have A, B and C. Wow, we have 3 waves. And this C makes a new low. Exactly, by closing. So this becomes 5, 3 and then we will give you the one more 5 wave now. From this low, you have 1, 2, 3, 4 and there you hit the 5. So you have 5, 3, 5. Wow, that means you need to know what's going on. By this time, when it makes 535, we already know that it is A, B, and C. So now we know. Now we know that it is going to make a 5 wave down. And how would you have been looked into the trading system? We would look only for short sell setups. Now, it's very interesting to see this. It's very, very interesting because when you go up in the shallow manner, usually what you see is an ending diagonal. Wow! Did RN Elliott explain ending diagonal? And the answer is yes. He did explain the ending diagonal. And whenever there is a break of pivotal line and then failure to make a new high, we know this is a flag pattern and we are going to sell from here. You need to have an observation methods. That means the moment, for example, when you want to walk, there are slow walks, there are brisk walk, there are slightly faster walking. So which one you fit? That means if you are heavy by body, you may fit a slow walk. If you are lighter or if you are medium, you may fit a brisk walk. If you are lighter, you may look for a very aggressive walking style where your body gets more exercise, sweatings, and it helps you to burn carbohydrates and it helps you to maintain your health in a good condition. Correct? The same thing, that those observations depends on you, not depend on anyone. So we know from this point of view, we started selling at the money call. We know at this point of time we were selling at the money call and we were buying out of the money call. So that means we were booking from this area to this area, credit spread. Our margins are low, yes, low margin just like a futures trading, but we were looking for credit spread. There is not even a single day I have seen the market don't represent itself in this way. Market has always represented in this way. So from here, from this point of perspective, we have wave 1, we have wave 2 and we are witnessing wave 3 now. So we may witness wave 4 before we make a one more low. Are we making one more low? The answer is yes. We are making one more low, but not before the phase of the consolidation, the phase that I already explained you. Okay? So what it tells you? It tells you that knowledge pays a very handsome money to you to live your life comfortably or happily. Okay, and now I'm going to put you little trouble for you. Now tell me, if you would have known this, would you have made this another 1,000 points from this point? 1,000 or how much point? Oh, under 3,000 points. Wow, it's hilarious. You know. Now you know. So friends, wake up call. This is on a wake up call. This is not on a joke. This is on a wake up call. Using subjective matter, that is Elliott wave method, to in a very objective based trading is very important. It's very important. You must have this knowledge to take benefit out of the market. I'm not telling you that you're not smart, but I'm telling you, you need a guidance where the method you want to use fits you. That is first priority. Then the amount you are going to risk gives you the more benefiting result. That's the reason people try to learn, but they learn. I know they learn. They learn a lot of MACD, a lot of RSI divergence, a lot of a super trend. Yeah. But hidden key is always a psychology, a pattern, and a very clear method to understand it. All right. Let's say that you know all these things now. Okay. So we are now looking for a consolidation phase here. Once the consolidation phase is completed, we are going to come down. Do we have any other trick in it? And the answer is yes, we do have trick. That trick will surprise you when it happens. Oh, when it happens, it will surprise you beyond your imaginations. And let me tell you this, these are all actually based on the this thing, right? On this thing, but there is a high-low comes into picture now. So, what are the way that wave 4 can unfold in the future or in the current market? Now, the wave 4 current market can repeat this pattern. Now, I'm not going to make a joke out of it, but all I'm going to make it is, I'm going to make it very simple, my friends. Very simple. It is this. See, again I'm telling you, this high will end the peak, but this will come near and do not cross this high. How it is it? Then you get this flag here, people will buy on the break of the flag and put the stop here, but they will be disappointed when this high is not met. Again it will come back to your stop and then it will go up. So this is how you can expect the upcoming market, which repeat in itself. So once this is completed, my friends, what are you looking? You are looking for one more drop. Alright then. This is important, my friends, and this will give you money. So, when you want to trade a sideways, make sure you have a proper method to trade on intraday, not on positional basis. All right. I hope I have explained you Sensex in a very beautiful manner. It's really so fantastic method that you people need to learn this. If you are not learning it, and it's just you are ignoring the money. That's all. Okay. Thank you.